Iraqi Dinar and Vietnamese. Dong, current updates and future projections. Introduction. The financial world constantly shifts, with various currencies gaining or losing value due to economic policies, political decisions, and international trade agreements. Among the most discussed emerging market currencies are the Iraqi Dinar, IQD, and the Vietnamese Dong, VND. Both currencies have been subjects of speculation, investment discussions, and economic reforms. This article explores recent developments surrounding these two currencies, analyzing economic trends, governmental policies, and potential future movements in their exchange rates. Iraqi Dinar, IQD. Developments and Future Outlook 1. Background of the Iraqi Dinar. The Iraqi Dinar, IQD, has had a tumultuous history, significantly impacted by Iraq's geopolitical situation. Decades ago, the dinar was a strong currency, valued at over $3 per IQD. However, economic sanctions, wars, and instability led to its significant devaluation. Following the 2003 U.S.-led invasion, Iraq introduced new banknotes to modernize its financial system and curb counterfeiting. Since then, the Central Bank of Iraq, CBI, has worked towards stabilizing the currency. Second, recent developments. Exchange rate updates. The Iraqi dinar is currently pegged to the US dollar at an official exchange rate of 1,310 Iraqi dinars per US dollar. Despite efforts to strengthen the currency, Iraq's reliance on oil revenues and the global economic landscape play crucial roles in its value. Government and financial policies. The Iraqi government has been working with international financial institutions such as the International Monetary Fund, IMF, and the World Bank to implement economic reforms. Key recent developments include reduction of dependency on US dollars. Iraq has increased transactions in dinars, reducing reliance on the dollar in domestic and international trade. Financial transparency and anti-corruption efforts. New regulations target money laundering and illicit financial activities, improving investor confidence. Oil agreements and economic stability. Iraq has secured contracts with international energy companies, ensuring stable revenue streams that support currency stability. The role of oil in Iraq's economy. Iraq remains heavily reliant on oil exports, which account for over 90% of its government revenue. The fluctuation of oil prices directly impacts the country's financial stability and, consequently, the dinar's exchange rate. Recent OPEC Plus agreements and rising global oil demand have positively affected Iraq's economy, providing optimism for future currency appreciation. The potential for revaluation, RV, and speculations. A significant portion of the discussion around the Iraqi dinar focuses on the possibility of a revaluation, RV. Some investors believe Iraq may dramatically increase the value of the dinar, bringing it closer to pre-war levels. However, financial experts urge caution, as drastic revaluations are rare and require strong economic backing. Factors supporting a potential increase in value. Growing foreign reserves. Iraq's foreign currency reserves have reached record levels, offering more stability. Increased global trade. Iraq's push to trade more in dinars rather than USD could strengthen the currency. Economic diversification. Expanding industries beyond oil, such as agriculture and manufacturing, can support long-term currency appreciation. However, challenges remain, including ongoing political instability, inflation concerns, and the necessity for further economic reforms. Vietnamese Dong, VND. Developments and Future Outlook. 1. Background of the Vietnamese Dong. The Vietnamese Dong, VND, has historically been a low-valued currency due to Vietnam's economic restructuring following the Vietnam War. Over the years, Vietnam has transitioned from a centrally planned economy to a market-oriented system, resulting in substantial economic growth. Despite this progress, the dong remains weak compared to major global currencies, with an exchange rate fluctuating around 24,500 Vietnamese dong per US dollar. Economic growth and currency stability. Vietnam's economy has been one of the fastest growing in Asia, with GDP growth rates averaging 6 to 7% annually. This growth is driven by strong export industries. Vietnam is a major global exporter of electronics, textiles, and agricultural products. Foreign direct investment, FDI. The country attracts significant investment from multinational corporations, particularly in manufacturing. Government reforms, policies promoting business-friendly regulations, and infrastructure development have boosted economic stability. B. Vietnam's efforts to strengthen the dong. The State Bank of Vietnam, SBV, has implemented several policies to stabilize and gradually strengthen the dong. Forex reserves growth. Vietnam has increased its foreign exchange reserves, reducing volatility, controlled inflation. The government maintains inflation at manageable levels, preventing rapid depreciation. Reduced reliance on the USD. Like Iraq, Vietnam is promoting trade in local currency, reducing dependency on the US dollar. C. Potential for dong appreciation. The question of whether the Vietnamese dong VND will significantly increase in value is frequently debated. Unlike the Iraqi dinar, which fluctuates due to political instability, the dong's valuation is more controlled by Vietnam's economic policies and trade balance. Several factors could lead to gradual appreciation, sustained economic growth. As Vietnam's GDP continues to expand, investor confidence in the dong increases. Bilateral trade agreements. Vietnam's trade deals with countries like the US, China, and the EU strengthen its economic position. Investment in infrastructure. The government is heavily investing in transportation and technology, boosting economic efficiency. However, rapid revaluation is unlikely, as Vietnam prioritizes currency stability to maintain export competitiveness. Comparison: IQD versus VND1. Both governments aim to reduce reliance on the USD by increasing local currency use in trade. Economic reforms are a priority to stabilize and potentially appreciate both currencies. 2. Key differences. 3. Investment considerations. The Iraqi dinar remains a speculative investment, with potential gains only if a significant government-led revaluation occurs. The Vietnamese dong is a more stable currency, with gradual long-term growth opportunities due to strong economic fundamentals. Both currencies carry risks, particularly due to external economic factors and government policies. Conclusion: what lies ahead for IQD and VND? The Iraqi dinar and Vietnamese dong remain topics of interest in the financial world, with investors speculating on their future movements. For the Iraqi dinar, stability efforts and reduced reliance on the USD offer promise, but political risks and dependency on oil remain significant challenges. For the Vietnamese dong, strong economic growth, foreign investment, and a controlled monetary policy position it for gradual appreciation rather than a sudden revaluation. For investors and financial analysts, monitoring these currencies requires staying updated on geopolitical changes, economic reports, and international trade policies. While both offer potential, the IQD is a higher-risk, higher-reward speculative asset, whereas the VND offers a more stable, long-term investment outlook. Ultimately, the future of both currencies depends on the effectiveness of government policies, global economic conditions, and investor confidence in their respective markets.